Hi everyone, Tom Wilmot here to describe what's in my most recent strategy for trading the Forex. Tried to make it as simple as possible. In this particular video, I'll show you the two basic indicators that allow you to have a pretty straightforward entry and exit strategy. I've called this particular template, basically nothing, version 1.1, simply because we're only using two indicators. The first is the what's sometimes known as the Chandelier, which is an average true range indicator, which is a mathematical formula somebody smarter than me figured out, so that when a price bar breaches this support level, we turn from support to resistance. And as you can see, we move along here and are in a downtrend until over here, when we have breached that indicator, feeling for support again. Got a slight bounce off it here before dropping down through and moving into a period of some chaos and confusion and up and down motion. Just to be clear, this is the Forex.com overnight switch. At about 8 o'clock, I think, in the evening, U.S. East Coast. This is 3 o'clock in the morning, the London Open for the East Coast in the U.S., and here's my dash vertical line for the Open in the U.S. session at about 7 a.m. in the morning. The second indicator that we have here is the stochastic, set to a pretty quick 4.33, and you can see that the quicker moving average does crossovers and so forth. You can either keep it like this, or if you go in and simply block out the quicker moving average here and move to no color, basically I can use this just to show when we're oversold or when we're overbought. And the basic thought in this simple strategy for an EA is that once we are overbought and still below the chandelier in this range here, with as few pips remaining between, in this particular case, 8 or 9 pips from the close of this candle up to the support level, actually 3 in this particular case, tiny type, we would then say, okay, well, our risk before we broke the chandelier would be less than 10 pips. And once we have less than 10 pips risk with an overbought situation, we do an entry in this area and look forward to the move downward. And what you could do in your strategy is simply to have a target profit level, say 20 or 30 pips. In the case of the Euro USD, maybe that would be sufficient. With some of the faster moving pairs like the pound yen or the euro yen, you get more bang for your buck, even though you have a slightly higher bid to ask ratio in terms of spread getting into the trade. But no matter, the idea is very simply that you would leave your stop loss of 10 pips or a break in the chandelier on until you achieved your objective. In this particular case, the change from here to here would be 38 pips, 39 pips, so that would be a reasonably nice trade. And with that, we'll close out this first video, except to say, in this particular chart, we were looking at the Euro USD on a 15-minute level.